Jay, a lot of firms approach thematic investing in different ways. How does BlackRock do it?
We really define thematic investing as looking at powerful long-term megatrends. And within megatrends, we have 5 different pillars. These are really pillars that are creating massive disruption across our economy. It's things like breakthrough technologies that are changing how we interact with the world around us, both virtually and in person. It's demographics and changes with people, how we're seeing aging populations as well as changing behaviors with consumers. It's looking at climate change and resource scarcity. It's looking at urbanization. It's also looking at emerging global wealth. It's these 5 different pillars of structural disruption.
Well, we'll talk about those in a second, but one big theme that a lot of investors are looking at right now is inflation. So can you talk about how thematic investing, how you do it over at BlackRock, sort of combats that?
Absolutely. So we have 3 inflation-fighting themes. These are themes that we believe not only are resilient to inflation, but also can actually create some of the solutions that should reduce inflation going forward. So one of the inflation fighters, it's clean energy. If you compare clean energy to fossil fuel-based energy, fossil fuel companies have to constantly buy fossil fuels, these commodities that are susceptible to inflation. Clean energy, a lot of the cost is up front. So really, you're not going to have that same level of inflation risk with a clean energy company. Secondly, we look at food innovation. So these are companies that are looking to produce food more efficiently, maybe using less water, less pesticides, less labor inputs. All those fewer inputs mean food can be produced at a lower cost. And then third, we look at infrastructure because infrastructure gets to reset pricing based off of CPI. So if CPI rises, those companies tend to benefit. So those are our 3 inflation-fighting themes.
Can you dig a little bit deeper when it comes to disruptive technologies like, for example, electric vehicles?
Yeah, absolutely. So electric vehicles are one of the most powerful themes that we see in the world today. Already we've seen a massive acceleration in adoption. Last year, adoption about doubled to about 7 to 8% of new cars sold being electric. But just this year, we saw the Inflation Reduction Act come out, which is bringing $370 billion in the United States to further EV adoption as well as clean energy. So things like tax credits to make the cost of EVs cheaper, as well as production credits to make it cheaper for companies to manufacture electric vehicles in the United States. So this is a theme already experiencing powerful tailwinds, plus it has this macro tailwind behind it from government spending. We think it's really set up for further adoption going forward.
You mentioned tax credits, but I want to talk about tax loss harvesting because we're coming upon that time of year. So how do thematic investors approach that?
Growth investments have been some of the most hurt investments in the market this year, unfortunately. We've seen it with tech stocks. We've seen it with broad innovation-focused indexes. That can be difficult, but there's a silver lining, which is that investors can potentially tax loss harvest. They can sell and realize a loss in those growth exposures, but it also gives an opportunity to refocus their growth exposures going forward. So they've sold out of one theme. Do they want to get exposure to a new theme that maybe has more power? Or they've sold out of a growth sector like tech. Do they want to get more refined in their growth exposures, looking for a powerful structural trend that they think can outperform over the long term? So tax loss harvesting provides a few benefits around capturing losses as well as allowing for more targeted exposure going forward.
All right, finally, you've mentioned a number of themes in our discussion. So how does an investor put it all together?
There's a lot of different approaches. We see investors using a sector replacement approach where maybe they replace the healthcare sector with a high-growing theme like genomics that is within healthcare but growing faster. Or we see people do core satellite where maybe they don't touch their core. They're going to have broad index-based exposure in their core, but they might buy 3 or 4 themes in the satellite portfolio and try to diversify. So it's not just tech themes, it's not just infrastructure themes, but looking across a few different parts of the economy to get exposure to several powerful long-term tailwinds going forward.
All right, well, thanks a lot for coming on and talk about it.
Thanks a lot.